So in this video we will be looking at the falling wedge pattern. And the falling wedge is a very useful bullish chart pattern which can both indicate a reversal, but it can also be a continuation pattern. And in this video we will take a close look at both of these. So we will start the video off by taking a look at what defines these two different types of falling wedge patterns, and after that we will take a look at some real life examples. So now we are very soon ready to start, but before doing that I just have to give a quick disclaimer. This video is for educational purposes only, and nothing in this video is financial advice. But alright guys, now let's jump right into the video. Alright, so the falling wedge pattern, what is it? Well, first of all, we can say that it is a bullish pattern, meaning that regardless if we have a downtrend prior to the pattern, or if we have an uptrend prior to the pattern, the goal of this falling wedge pattern is still to break here to the upside. And that is why we call it a bullish pattern. And the actual pattern basically consists of consecutive lower highs. So we have one high, lower high, and at the same time we're printing consecutive lower lows. So one low, lower low, lower low. But the key thing about this pattern is that if you take a look at the lows, you can see that the line, the sort of downsloping support line, is not as steep as the downsloping resistance line. So this is basically what defines the pattern. You can see in the case of an uptrend, we also have, highs, consecutive lower highs, consecutive lower lows, but the lower line is not as steep as the upper line. And this pattern can be a bit confusing in the beginning because in the actual pattern, the price is moving down. So in both cases, in the actual pattern, we have a sort of downsloping or bearish movement, but the actual pattern is bullish. And as I said in the beginning, there are basically two different types of falling wedge patterns. First off, we have the reversal pattern. So when we have a downtrend prior to the actual pattern, then we call it a reversal pattern. And when we have an uptrend prior to the actual pattern, then we call it a continuation pattern. And just some real quick psychology here. Why is this pattern actually bullish? Well, if we have a healthy downtrend, then the bears should be able to push the price. Every swing, the bears should be able to push the price down a considerable amount. But if you take a look at this pattern, you can see that the sellers here, or the bears here, is sort of getting exhausted. For every low, the bears can only manage to push the price down a tiny bit. So this is sort of a consolidation pattern where the bears is not showing a lot of strength. But okay guys, so now let's take a look at some entry points. And the best way to do that, I think, is to right away take a look at some real life examples of falling wedge, or another name is descending wedge patterns. But let's jump into the example and take a look at some entries. Alright, so right now I'm looking at the S&P 500 index, and what you can see here is a falling wedge. You can see we're printing consecutive lower highs and at the same time consecutive lower lows. And one way to enter here is that you actually enter right on the breakout. So in this case, you would have entered right here if you use this strategy, but at minimum, you should wait for the candle to close above the downsloping line here. Many traders would prefer to wait for some confirmation candles, and confirmation candles are basically candles that close above the white line. So some traders are fine with one candle, some traders want up to 3 candles, so they would perhaps enter up here. Another way to enter is to wait for some sort of retest. So a lot of traders want to, after the breakout, wait here for a pullback to then enter on the pullback. This is, this has some, pros. For example, you often get a lower entry price, but it also has some downsides, because in many cases, after we break out, the price will never look back and just shoot up if we have a strong breakout. So for example, in this case, the price actually never reversed. So if you would have waited for a pullback, you would have missed this trade. So So that is, you know, two examples of entry points, but there are more methods, and you know, different traders have different trading styles, so there's no, you know, perfect entry, and all markets are different. But what about some target levels? After we have entered the trade, what are some levels where we can look to take some profits? What are some profit taking levels? Let's jump back into the chart and take a look at an example. So in this case, we're looking at a falling wedge once again, but here we actually are trading with the trend. So you can see prior to the pattern, we have an uptrend, then we have the falling wedge appear, and then we break out here to the upside. So this is the example of the continuation pattern version of the falling wedge. But the same profit taking methods we talk about here also applies for the reversal falling wedge. And one way to take profits here is to use the 100% measure move. So what you do is that you measure how large is the structure. So in this case, you measure the wedge like this. You take this measurement here, and then you measure here from the breakout. So in this case, your target level would be all the way up here. And as you can see, the price just barely missed this one. We saw a pullback, but then later on we actually reached the profit taking level. So eventually, if you were patient, you would have gotten your profit target right there. But another method, and I kind of like this one, is to take profits at the very high of the structure. So in this case, the very high of the structure is here, and your profit target level would be right around here. And as you can see, this level was hit much earlier than the second target, and this is a level that has higher probability to actually be hit. So let's say, for example, that the price wouldn't reverse up here and would continue to fall, then you would have failed the trade if you had this higher profit target level, but you would have succeeded with the trade if you had this lower target level, which comes from the structure high, and the structure high is the absolutely highest point of the wedge. But alright guys, that's pretty much it for this video. If you feel like you got any kind of help or value, then please consider dropping a like. And if you guys are interested in more, then don't hesitate to subscribe and hit that notification bell. I hope you guys have an awesome day, and I hope I will see you guys in the next video. But for now guys, take care. Ciao, ciao.